Well, hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it was a volatile Monday that we've kicked off, given the fact that the Nifty in fact has managed to close below that 19,700 mark. Towards the mid-session, we did manage to recover some ground, but we once again we submitted to or succumbed to profit booking, and we managed to end the day just below that 19,700 mark. In fact, second day of weakness setting in after the sell-off that we saw on Friday, that was largely triggered by the IT pack. But if you look at the broader end of the markets, the Nifty small cap index continues to outperform. That was one index that managed to end in the green. If you look at the sectoral movers, FMCG metals were under pressure. You had the likes of PSU banking index, pharma, autos. These were among the top sectoral gainers. Let's take a look at some of the Nifty losers. Of course, ITC, after the news that the board has given in principle approval for a demerger of its hotel business, that stock was down over 4%. Kotak Mahindra Bank numbers were good, but Street was, I think, disappointed by the slowdown in retail growth, retail loan growth rather. So, Tech Mahindra, Reliance, Britannia, HUL were some of the other laggards. On the flip side, you had the likes of Dr. Reddy's, you had SBI Life, which, by the way, reports earnings tomorrow, IndusInd Bank, M&M and Coal India. These were among the top Nifty gainers. Talking specifically about Reliance Industries, of course, subdued oil to chemicals, business growth in that end of the business, and that's why stock is down, even though retail and Geo provided some support to earnings. ICICI Bank, that stock, I think, managed to hold on to some gains after, first quarter numbers were extremely good. In fact, the analyst community is bullish on the stock. In fact, they believe that valuations are still reasonable when it comes to ICICI Bank. Kotak Mahindra Bank, as I mentioned, despite strong growth in profit and, strong asset quality, retail loan growth is something that disappointed the street, and that stock was among the top Nifty losers in today's session. Tata Steel, that stock is in focus ahead of earnings later in the evening. Lower realizations and weakness in its European operations are some, factors that may hurt its first quarter performance. So that stock in focus. JSW Steel was another loser on the index after earnings weren't all that enthusing. On the other hand, when you look at the metals pack, you had Vedanta. That stock also slumped somewhere around 2% or thereabouts. Citi has downgraded the stock to sell, and the target price has been cut to 225 rupees a share. On that note, let me also bring on board my guest for today, Nilesh Jain of Centrum Broking, joining in this afternoon. Hi Nilesh, good to have you on the show. Looking at the index, we were so close to that 20,000 mark on Thursday, but then again, the IT pack, played party pooper, and now we are 250, 300 odd points away. So looks like 20,000 is off the table when it comes to the July series.
Right, Nandita. Well, if you look at the 20,000 mark, that's just a number, I think, and we have almost kissed those figure, and we have witnessed some amount of profit booking last 2-3 consecutive sessions. Since we have entered into the monthly F&O expiry week, now in this week we expect more volatility. Nifty might find support near about 90,500, because even if you look at the derivative data, that shows that 19,500 has meaningful open interest, followed by 90,600, whereas continuous call writing at 20,000 and 19,900 might restrict the upside. So for the July series, I think we are done on the upside, and going forward, we may see Nifty oscillating in the range of 90,500 to 90,800. For the next series, we might see Nifty moving beyond 20,000 mark and inching towards 2,200 to 20,500. But for this series, we believe that there could be consolidation, and the focus now should be on stocks and sector specific. We have seen some pressure in the Nifty IT space. On the contrary, we have seen some buying interest getting emerged in the sectors like pharmaceutical, PSU banking, and a couple of private sector banks are doing good. So the focus should be on stock specific and sector specific action.
Right, you spoke about private banks. Of course, we had earnings kicking in from the likes of Kotak Mahindra Bank and ICICI Bank over the weekend. For Kotak, of course, deposit growth was healthy, advances growth healthy. It was just the weakness in the retail loan growth that may have been a dampener. But brokerages have maintained their faith in the stock. Morgan Stanley has an equal weight rating. Yeah, you have JP Morgan has a neutral rating, target price at 2070 or thereabouts. But if you look at the stock, I think, it's a bit on the expensive side when it compares to the likes of ICICI Bank, Axis Bank, IndusInd Bank for that matter. And stock had run up quite a bit ahead of earnings as well. So today it's among the top Nifty losers. What is the kind of strategy you would advise on Kotak Mahindra Bank now that the earnings are out of the way? Would you advise investors to buy into this dip?
Well, Nandita, as you rightly mentioned, the stock has already witnessed quite a bit of run-up ahead of the numbers. And post numbers, we have seen some profit taking happening at the high levels. So, if you look at the overall structure, the stock is facing major resistance near about 20,000 marks since a long time. If you look at overall structure, since last 1.5 year, the stock has traded in the range of 2,000 to 1650. 1650 acted as a major resistance, a major support zone, whereas major resistance is placed at 2000. So overall, we believe on immediate basis there could be some amount of consolidation, but once this consolidation gets over and the stocks breaks out about 2000 mark, then we might see a follow buying towards 2100 to 2200. As of now, the approach should be one should ideally wait for a good amount of correction towards 1850 to 1840. That could be a good entry point. And on the upside, as I mentioned, any decisive breakout above 2000 will open upside towards 2100 to 2200. The support, the stop loss should be placed below 1750.
All right, those are the levels to actually buy into a Kotak Mahindra Bank. Let's talk about ITC, Nilesh. I mean, of course, it has been the top Nifty loser today. Of course, there's news flow that the board has given in principle nod for demerger of its hotel business. In fact, the company will hold 40% stake in the new entity, and shareholders balance 60% will be held by the shareholders. In fact, the board has approved the incorporation of a wholly owned subsidiary of the company, which will be called ITC Hotels, and the new demerged entity will be listed separately subject to board approval. Now, we've seen ITC as a stock surpass HUL and become the most valued stock. In fact, this has been one of the most, this stock in fact has seen, the most phenomenal run over the last year or thereabouts. Would you say that this, this news flow was actually priced in given the kind of rally it has seen over the last few days itself? And would you say that this dip is a much needed dip to actually buy into the stock before it hits that 500 level?
Absolutely. This news was very much due and it has already priced in. We have seen quite a bit of run up in last couple of months on the back of demerger news. Now, since the finally news has arrived, we have witnessed good amount of correction from the high levels. So I believe that there could be possibility of some more selling pressure. That follow-up selling pressure could take ITC towards 450 to 440 sort of levels on the lower side. That could be a good entry level. At current level, I believe, I think it's a wait and watch mode. And once it reaches the levels of 440 to 430 zone, that could be a good entry level for the upside target of 500.
All right, that's the view on ITC. Then let's talk about L&T. Of course, it will be reporting its earnings tomorrow, and it will be considering the proposal for share buyback for the first time ever. In fact, revenues are expected to be healthy in the range of 13% on a YY basis. EBITDA is seen up 15%. Margins likely to come in at 11.3% versus 11% on a YY basis. Now, this stock did hit a fresh 52-week high in today's session itself. How should one approach this stock ahead of earnings?
Well, in last 3 consecutive sessions, the stock is hitting all-time high levels. Today as well, it has ended at all-time high level closing. And as we have seen in few companies ahead of the numbers, the stock is getting, sort of pricing in the numbers. That is what we are currently witnessing in L&T as well. So at current level, it is not advisable to go long because there might be, there could be possibility of profit booking at the high levels. Those who are already holding can continue to remain long with the stop loss below 2550. So that should be the stop loss for the long position. And ideally, for fresh entry, one should wait for some amount of healthy correction in the range of 2500 to 2450. That could be a good entry level, keeping stop loss below 2420. And the upside is very much open for 2650 to 2700. But at current level, the risk and reward is not that much favorable. So ideally, one should wait for some decline for fresh entry.
Right, wait for declines for fresh entry when it comes to L&T. Let's shift focus to Paytm. Then, of course, Paytm reported its earnings. Q1 losses have narrowed on a YY basis. And in fact, Vijay Shekhar Sharma has indicated that they are targeting, to turn cash flow positive by year end itself. But, of course, CLSA has maintained its buy rating. Citi has maintained its buy rating, target price in excess of 1,000 rupees or thereabouts. But the stock was down somewhere around 4.5%. I mean, would you just call it profit booking, or how should one, what kind of level should one expect in the near term, at least when it comes to Paytm?
Well, and the numbers were looking good. We have seen a positive commentary from the management as well. But today, surprisingly, we have witnessed some amount of selling pressure at the high levels. And looking at the overall technical structure, there is still further room on the lower side. Stock might test the levels of 780 to 750. So to make a fresh entry, I would again suggest to wait for some meaningful correction in the range of 750 to 740. That could be a good entry point. And those who are already holding the long position can keep a stop loss below 700. The stock has turned positive and the stock is moving in a upward trajectory, and it is forming a high top and high bottom formation after hitting the lows of 450. So currently it is in a profit booking mode and it may continue to witness selling pressure at the high levels. We need a decisive breakout above 850. Post breakout above 850, we can expect stock to move towards 900 to 950. So from medium to long term perspective, this stock looks good to buy on decline. On immediate basis, we might see some amount of selling pressure at the high levels.
Right, that's about Paytm then. Decisive breakout about above 850 rupees is what is needed for Paytm to head higher. Let's talk about Aarti Drugs. Now, this stock was up 18% or thereabouts, on the back of the approval for share buyback. In fact, 60 crore rupee share buyback at a price of 900 per share, which is at a 76% premium rather. Earnings were healthy. Management has said that they are targeting EBITDA margin in range of 14.5% to 15% for the second half of the year. A breakout stock, Aarti Drugs now, Nilesh, what's your call?
Absolutely a good breakout stock. It has broken out from its 1.5 year long consolidation. And usually we don't see that kind of volume activity that we have seen in today's trading session, a big gap up and post, and it has very much sustained the particular gap that we have seen today. So it looks like a breakaway gap and which is very much sustainable. We might see a follow-up buying which might take this particular counter towards 650 to 680. So that could be the immediate target that we can expect in the short-term time frame. Positionally, a big rounding bottom has been formed on this particular counter, and the upside looks like very much open for 800 sort of levels, positionally maybe 8 to 12 months perspective. And if you look at the overall structure, it is indicating that it is better to wait for a good amount of correction to make a fresh entry. It is not advisable to buy at high levels post a gap up of almost 18 to 20%. So the risk and reward is not favorable for the fresh long. Or if somebody is already holding the long position, can continue to remain long, keeping stop loss below 570.
Right, that's the view on Aarti Drugs. From one breakout stock to another, SJVN is one stock I want to ask you about. That stock was up somewhere around 14% or thereabouts, if I'm not mistaken. It has bagged a 7,000 crore rupee order from Punjab State Power Corporation for the development and procurement of 1,200 megawatts of solar power. Now, SJVN has been in a steady uptrend. In fact, I think in the last 5 sessions itself, it has clocked in a gains of somewhere around 23% or thereabouts. Time to book profits?
Absolutely, Nandita. This stock has been in a secular uptrend. If you look at in this particular month, for the July month, it is up close to 40%. And after a run up of 40%, there is high possibility, high chances of profit booking at the high levels. So it is better to book out some partial profit near about 58 to 60. That's the good profit booking zone. And if somebody is looking to make a fresh entry, I think I would rather wait for some meaningful correction in the range of 52 to 50. That's a good entry point, keeping stop loss below 46. If somebody wants to stay put, then keep a trailing stop loss below 52. And upside immediate target that we are expecting is of 60. If it sustains above 16, then there could be possibility of follow-up buying, which might open upside towards 64 to 65.
Right, that's the view then on SJVN. Two stocks, PFC and REC, they were high flyers in today's session. How should one approach these?
Both the stocks have done quite good, has been in a secular uptrend. Again, both the stocks moved in line with each other. And if you look at these stocks, both are looking a replica. And the upside is still very much open for PFC for the upside target of 260 to 280. And for the REC, if you look at the overall structure, that is hinting that the stock is ready to move towards 200 sort of levels on the upside. Again, a similar strategy in both the counters. It is better to buy in a staggered manner. Both the stocks are a portfolio stocks. We have seen this particular segment. Power related stocks have done quite good in last few months, few years, I would say. So overall, in the short term to medium term time frame, I think PFC and REC both have good potential to outperform on the upside. As I mentioned, PFC looks good for the upside target of 260 to 280. REC is looking positive for 200 sort of levels on the higher side. One can keep a stop loss below 160 for REC and keep a stop loss below 220 for PFC.
All right, looking good on the charts, REC and PFC. Let's talk about TVS Motors. Numbers have just come out. Profit is up 46%. Revenues have risen somewhere around 20% on a YY basis. Of course, last quarter, TVS had handed in a very good set of numbers. We saw the stock hitting fresh record as well. Now, numbers look pretty healthy on the face of it. How would you advise investors to play it in tomorrow's session, if I may ask you that?
Today it has given a good close, well above its 50-day moving average, which is somewhere around 1300. And looking at today's close from the higher levels, we have witnessed some amount of profit booking. So there could be possibility of some follow-up selling on the back of profit booking, which might take TVS Motor towards 1250 to 1240 sort of levels on the lower side. But I think it's a good correction to make a fresh entry. Overall, the stock has done quite good from the auto space. We are very much bullish for a positional target of 1450 to 1500. But before that, there could be possibility of some correction that should be utilized the buying opportunity. One can keep a stop loss below 1200 as a positional bet. One can buy on declines. The major structure looks positive, but on immediate basis, the near-term structure looks slightly volatile and consolidation cannot be ruled out. So on immediate basis, we believe there could be possibility of some follow-up selling, which might take TVS Motor towards 1250 to 1240, which could be a good entry point.
All right, look at buying TVS on dips. Last talk on my radar today, PVR. Given the fact that we've had some blockbuster Hollywood releases over the last couple of weeks, and of course we had PVR in fact slashing F&B prices a couple of weeks ago. How does this look on the charts now? Any reversal in fortunes expected for PVR?
Well, Nandita, we have seen a one-way correction in last 1 year from the levels of 2160 to the levels of almost 1300. The stock has recently hit. Now, what is happening? The stock is trying to make a good base formation in the range of 1300 to 1400. It is making an attempt to negate the formation of a lower top and low bottom. But we need a decisive breakout above its 200 exponential moving average, which is placed around 1550. So 1550 is the major hurdle that needs to be surpassed to call it as a short-term bottom. But at current level, the risk and reward is still favorable. So one can take a contra bet, keeping strict stop loss below 1390, and on the upside, one can preempt the breakout, which is placed at 1550. Post breakout, we can expect the stock to outperform and move in the range of 1600 to 1650. Overall, from a risk and reward point of view, I think it's a good bet to play a pullback.
All right, that's the view coming in on PVR. Then, before I let you go, Nilesh, any stock recommendations over the next couple of weeks for our viewers?
Absolutely. So we spoke about auto space. So we are liking Tata Motor DVR from that particular space. The stock has been in a steady uptrend, and it has reached almost close to its all-time high mark. It has given a multi-month breakout from a falling trend line, and it looks like it is heading towards 380 to 400 sort of marks. And one can buy at current level and add on declines, keeping stop loss below 340. So that should be the stop loss. Upside targets are very much open for 380 on immediate basis. From positionally, it might test the levels of 400.
All right, Tata Motors DVR, one stock pick coming in from Nilesh over the next couple of weeks. With that, Nilesh, thanks a lot for taking out time and joining in this afternoon and, speaking about all the stocks that I had on my list. Well, with that, we've come to the end of this edition of Closing Bell. But of course, I'll be back with the markets tomorrow morning at 8:30 a.m. So don't forget to tune in. But in the meantime, if you have any, comments that you want to send in to us, leave them in the comment section below, and we will take note of them. But for now, it's a goodbye from me. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.